I'm Liz Claman with today's Claman Confidential, and we're joined by Bill Gross of Janus Capital, known as the Bond King. Bill, I have to get right to it. The market has been very scary the past couple of weeks. If you had to pinpoint one reason, what is it?
I think too much debt at too high of an interest cost. It's really the big short part two, and not that the markets are going to crash like in Lehman, but there's too much debt globally, and we see that in energy. We see that with banks extending loans to commodity-based producers, and so the debt is being haircutted, and market prices are moving down because of it.
Well, as you look at what's going on with the markets today, it seems the financials are getting smashed. And here we had last week the Bank of Japan going to negative interest rates. How horrible or not? You have to tell us, is that a negative feedback loop where people look and say, are things really that bad?
Yeah, I think banks are getting hit on two fronts. First of all, they've made loans to commodity producers and to energy companies that may at some point have to be haircutted, that is defaulted on. But secondly, yes, as interest rates come down, their margins, their what they call net interest rate margins, are narrowed. Basically, a bank or an investment bank needs a very positive yield curve, and as interest rates come down, they can't earn that amount of money that they're typically used to. And so, we see bank prices, stock prices moving substantially lower on two fronts.
Bill Gross, thank you so much, and watch our full interview with Bill on lizclaman.com. Countdown to the closing bell. You got to join me every day, 3 p.m. Eastern, for all the smart money talk.